Okay, so you guys all know Steve's bio. I read it to you like 3 or 4 times, right? He's the bit guy. And I came up with a name for myself. I call myself Dr. Pepper now because I arranged the pep talks. What do you think?
The Dean will like it. Dean will like it. He likes nicknames.
Okay, this is our fourth and final session for this semester with the bit guy, although I know we're going to have him back next semester to talk about other things. He's got a wealth of knowledge on things like artificial intelligence and so forth. So thank you, Steve, for 4 really cool sessions. I've learned a ton. I'm sure that all the students have as well, and I know we're going to get some more great info from you today. So today's title is the title of the entire 4-session track, Fix the Money, Fix the World, and tell us how to do it, Steve.
All right. Okay. Well, I want to thank you for arranging these pep talks. I feel like this is home for me.
It is
The pep talks. I've been doing them now for, I guess, since the last
3 semesters.
3 semesters, and I enjoy the opportunity to get in front of you students and talk about things that are current and maybe top of mind. So I'm really pleased to be here, and I want to thank you all for showing up for these sessions and your attention and your good questions, and especially some of the after sessions that we do. We kind of dig into these questions in a little more detail, and it's obvious to me that some of you have been actually following this this the developments of cryptocurrency and Bitcoin over the years. So it's not like I'm talking to people that have no idea, what any of this is. But nonetheless, it's been good to review these things. So again, just to wrap up this sort of the series summary. We started with Money 101. We started with, the second session was trying from my perspective to decode Bitcoin, to kind of break it down, what it is actually, and this concept of the overall concept of what money is, and what role Bitcoin and cryptocurrencies play in this monetary system that we work with today. It should be at the top of your list of need to know concepts you need to delve into. I can think back to my undergraduate days many decades ago and realize that we didn't talk about money in my courses in economics. We talked about classical economics, but we didn't talk about money specifically, what it was, where it came from, how it was created, what its value actually what it actually represents. Is it what does it have as value? What's the value proposition? And because of that, I kind of go through my professional life and my regular life, and like everybody, I'm always thinking about the future, and am I going to have enough money to retire on? Am I going to have enough money to, to meet all my obligations, my bills, put my kids through college, et cetera, et cetera. And just like you, those questions were always in my mind, but I didn't have any formal training in any of this. And the result was, I felt like a kind of a leaf on a brook or on a river, right? I would go wherever the currents took me. And, that's frustrating when you spend decades working, saving, earning a living, trying to plan for the future, to be pushed around the currents wherever some invisible hand is taking you. Yeah. So I think this is an important topic, and it's timely, because as you finish your degrees, wherever you are in your educational journey, and you get out into the world, these are questions that are going to confront you. And I think it's going to be a stronger base from which to address these questions and issues and do your planning when you have a better understanding of what these questions are. So, what is money? We tried to cover that. What is digital money, or cryptocurrencies, if you will, in the modern, and the debate rages, right? I mean, you can listen to people like Jamie Dimon, who says Bitcoin is a pet rock. It has absolutely no value. It's going to go to zero, blah, blah, blah. Yeah. Or you can listen to some of the crypto bros that are online, on Telegram or whatever, talking about going to the moon and all that stuff, right? So like there's a huge gap between these understandings and these predictions. There's a huge gap. And there's only one way to address it. We need to literally do our own research. If we don't do our own research, we're going to be like that leaf on the river that gets taken wherever the currents go, right? So this is a good start. We looked at beyond Bitcoin, I tried to talk about what, these concepts of altcoins and CBDCs, which again are more of very much a central bank, CBDC, central bank digital currency, by definition in the phrase central, which is the opposite of decentralized, which is what altcoins and Bitcoin are attempting to do, is to decentralize the financial system so that we have security and more control over the outcome. It's more democratic, if you will, with a small d. And then we finish up here in session 4 with the future. What's the future look like? So as I reflect, and I did some reflection this weekend, over the first 3 sessions, and I hope I've done it justice. This is a complex subject, and we've got a wide variety in the audience of knowledge base of how you come at this. And so it's really difficult in 4 one-hour sessions to cover these topics in any depth, to give you any real understanding, beyond what you already know about this topic. And as I said, there's a wide variety here of people that know about it just from, the news, the mainstream news, and people that have actually done some research and, taken the dive in or gone down the rabbit hole, so to speak, to try to understand what these things are about and how they affect the financial system that we have today and how they will affect the financial system in the future. So I'm going to try today to do less. I'm going to end up talking. I always do. But I really want to push my questions onto you and let you start to think about these things in more detail. So first, we all need to send some love to the cypherpunks. The kind of the weirdos and the staying up all night, contributing to open source projects and thinking about security and the internet, going all the way back to the early internet days. I mean, when the internet was conceived in the 1970s, we had people that were worried about the security of all of this data that's flowing back and forth between these nodes. And the cyberpunks are really the people that, as Wired magazine says, rebels with a cause. And the cause is your privacy. Because as we learned, as the World Wide Web caught on in the 90s and began to, we're all on it today. You can't not be on the internet today unless you're living in a cabin in Montana in the woods with no internet connection. Can't not be on the internet today. And so privacy has become a big issue, and we know about that. Again, Facebook, Instagram, TikTok, WeChat. I mean, whatever social network you're in, there's always this issue of privacy. Who owns your data? Who controls your data? We make this trade-off of convenience, the ability to share photos through Facebook with grandparents and parents and, families around the world or friends around the world. We share things. We share an unbelievable amount of stuff. And that data no longer remains our private data. It's now, in a sense, corporate data or more broadly, public data. And so this data privacy thing was the thing that motivated these cyberpunks, and in the context of that, the thing they came to was sort of this concept of money. Money is the most private property that we should have, right? When you go to work, you get that paycheck, you put it in the bank account, that should be your money. That's private property. That should be, if we think about private property as a human right, the stuff you
give your labor, your intellectual labor, your physical labor to, and you earn it, it should be yours and not anybody else's. It shouldn't have, I mean, obviously, we live in a system of, quote unquote, the rule of law. If you break the law or whatever, maybe your private property can be confiscated, but it should be done through a process that is legitimate, that you trust, that you understand, so that at the will of some central banker somewhere in the world, your property can't simply be confiscated. So this idea of privacy is what drove the cyberpunks, to develop this concept of a cryptocurrency, culminating in the 2009-2008 white paper by Satoshi Nakamoto, which was again a process, because there were prior developments in this area of creating privacy in the internet, and private money on the internet, step by step, until ultimately, with this blockchain concept, we were able, Satoshi Nakamoto was able to solve some of these dilemmas or problems that really restricted the ability for things like e-cash and David Sham's concept of money, et cetera, internet money. Those didn't meet the test of all of the things that needed to be met for true privacy or private property being, your money being your private property. So we can send some love to the cyberpunks. All right, I'm going to skip through these. I want to talk for a little bit, because right now, today, actually, let me pop out of this.
You can see myself at the top there.
Yeah, I mean, so crossing the chasm is a big question in something like Bitcoin or cryptocurrency. And this curve is representative of almost all new technologies that come out. It's not just cryptocurrency or Bitcoin, but we can put ourselves in this space, and essentially that there's this time and percent of adoption scale, and time can be anything from days, years, to decades, to centuries, right? But with modern technologies, some of these technologies like the World Wide Web, et cetera, some of these new modern technologies, AI, these adoption curves, the time frame gets shortened, yeah, whereas the market penetration, it happens more quickly. But where are we on this cryptocurrency or this Bitcoin curve today? Because the big question is, when you see Bitcoin pumping like it did over the weekend, hitting an all-time high today, yeah, you see that, 30 days ago, we were 50% lower. We've had a 50% gain in the value of Bitcoin in 30 days. Okay. Well, the tendency is to say, oh my God, this is just going to go to the moon, as they say in Bitcoin world. It's going to go to the moon. We're all going to get rich. Just buy some Bitcoin and wait it out for another couple of months, and 100%, 200%, whatever. Yeah. Is that the curve we're on? Okay. Careful. Do your research. Do your research, because these things have a tendency to swing. And I want to pull up a chart to show you what I mean by that. But let's just think about this chart for a moment, because where are we? Because people say, well, it's already $67,000 per Bitcoin, too expensive. I could never afford $60,000 to buy a Bitcoin. What? Okay, so I missed out on this boat. I got to wait for the next one, if there is a next one, right? That's probably not an accurate. That's probably not an accurate sense of really where we are. Money. There's this theory that the best money always wins, right? So is the U.S. dollar the best money in the world? Right now, it looks like the leader, clearly. Most international trade, global trade, is settled with U.S. dollars, not with Bitcoin, not with Chinese yuan, not with British pounds, not with euro dollars. It's settled in U.S. dollars. What gives the U.S. a financial privilege in the world. So all of you live in the place where financial privilege is how it's referred to by people in emerging economies. They do not have a financial privilege, because their currencies are always subject to this dominance by the US dollar. And it can be, and it can be a real instrument of colonialism. Okay, so where are we on this curve? We are probably at less than 10% of adoption around the world. Bitcoin as money or as currency or as a store of value. We're probably about 150 to 200 million people. And I say 150 to 200 million people because with this launch of ETFs, exchange traded funds by people like BlackRock and Fidelity and others, the number of people that are taking a position, and I use that phrase, taking a position in Bitcoin, is growing like it, so the BlackRock ETF has now grown to more than $10 billion in about a month, $10 billion in assets under management, Bitcoin assets under management, meaning that they have purchased $10 billion of Bitcoin in a month at BlackRock just to back the ETFs that they've been selling to retail clients, investors. Right now, a lot of those investors are not your average man on the street or woman on the street. Those retail investors happen to be other asset managers and institutions that are coming in because now they have an easy, convenient way without the heavy overhead of self-custody to get into this market, to take a position in Bitcoin, right? It's like taking a position in gold. Gold has an ETF. And the total market value of all the gold in the world is about $10 trillion, right? But to take a position in gold, you can't literally go down to the store and buy a gold bar. You can go buy some gold jewelry, but that's a tough way to save up, for retirement by buying gold jewelry and storing it in your house. But you can't actually buy a gold bar. Why? Because that's all stored in a vault somewhere in the world, usually in a neutral country. There are restrictions on literally owning gold bars in the US, but you can buy a gold ETF or a paper, a certificate, a gold certificate that says that, okay, you own a share of that gold that's stored in the vault. And that share is your way of taking a position in gold. So the same thing with Bitcoin. BlackRock is buying the Bitcoin, storing it through third-party storage services, custody, if you will. They're taking custody of the Bitcoin, and then they're dividing it up and selling shares at about, I don't know, today it's around $35 per share. You can buy Bitcoin or take a position in it. And keep in mind that you're not taking custody of the Bitcoin. You're leaving custody in the hands of BlackRock or Fidelity or whatever ETF that you're investing in. You're not taking custody, but you are getting a certificate that says that you have a share of the Bitcoin that they have been purchasing. And again, with the SEC, one of the things that held up the whole ETF market, one of the things that held it up was this question of whether or not you actually need to validate or verify that you're holding sufficient Bitcoin in reserve, in custody, so that you're selling shares against it. You're not selling paper shares or IOUs or things that aren't actually backed by Bitcoin, right? Remember, fractional banking, this concept of fractional banking is you put your money in the bank, in a checking account, savings account, the bank then lends that money out. So it's no longer in the bank. You've got a certificate that says you've got a claim on that money, but that money is no longer in the bank. Most of it is out in loans, commercial loans, home mortgages, et cetera, right? So if you went to the bank, if everybody went at once to the bank to get their money out, 90% of the people would get zero back because it's not there. You'd have to call in all those loans, right? And that's not going to happen. So where we are on this curve is in very, very early, just probably at the border between innovators and early adopters, because the early adopters are going to be these people that come into this ETF market. So you can see this S curve has a long way to run, and that's the subject. All right, so I've heard this for years. from people like no less than Warren Buffett, who's gotten very, very wealthy in the fiat world through his investment in stocks. Warren Buffett, along with a number of other very successful fiat world investors, have been, promoting this phrase for years that if it doesn't produce any income and therefore you can't calculate its intrinsic value. Okay, well, that's saying that money has no value. That the only thing that has that, because money there's no intrinsic value to your money. It's simply money is an abstract concept. It does not have intrinsic value. It does not produce income. So what makes money valuable? Money is a share of the total gross domestic product or gross world product, whatever it is. Money is a share of that. And so, if we say, okay, the only thing that has intrinsic value is a stock that produces an income stream, Warren Buffett would argue that. The counter to that, the cyberpunks and others in the early Bitcoin space said, okay, as Gandhi said, first they ignore you, they dismiss you. Bitcoin, it's a pet rock. Cryptocurrency, it's nothing. It's a fever dream. Yeah. First they ignore you, then they laugh at you. What, you're buying Bitcoin, and then they fight you. Again, this whole regulatory environment that has made it difficult for your banks to connect to your exchanges where you can buy and sell Bitcoin. This question of whether or not Elizabeth Warren has a bill in Congress that she'd like to get passed. I don't think it'll ever pass, where it prohibits people from self-custodying your own Bitcoin. If you're going to buy Bitcoin, you're going to have to leave it with the bank, with BlackRock, with Fidelity. What's up with that? Yeah. Okay. Sounds like another scam to me. And then you win. Okay, so that's the sort of the Gandhi take on it. This is the curve, or this is the chart that I like to look at when I'm thinking about the future of Bitcoin, or the Bitcoin specifically. I don't talk much about crypto or altcoins in this sessions because, first of all, I think there's a whole different purpose for altcoins than pure money. I don't think altcoins are trying to be to replace the US dollar or the monetary system. They are trying to create some value for different services and products, et cetera, that are exchanged using tokens. But and I don't want to, this is too short a time to get into altcoins and the concept and whether or not they make good investment vehicles. Because again, some people today, I noticed some of my feeds on Telegram today are popping. Everybody's saying, oh, look at Bitcoin. I better get in and buy some more Dogecoin. I worry about people making the connection between Bitcoin, which I think is superior money, to these altcoins, because I don't think they're the same thing. And I know there are probably some people in the room who are probably buying some crypto and or altcoins, meme stocks, if you will, meme coins. But I want to caution. I would caution you to be careful, and again to be realistic about what Bitcoin is and how it differs, and what its long-term purpose is. Okay, but if I look at this chart, so the dark lines, the vertical lines, right, are what we call halving events, where the amount of Bitcoin that you can earn by mining it, for a certain amount of energy input, you get it every 4 years, roughly every 4 years, actually every 260 or 280,000 blocks on the blockchain. The reward cuts in half. So the amount of Bitcoin you earn for finding the magic number, the random number that's part of the scheme of validating the blocks on the blockchain gets cut in half. All right, so that's what those dark lines represent. And halving events have traditionally made an impact on the market price for Bitcoin. Those vertical or those horizontal lines this chart is is a logarithmic chart. So in time, in terms of time, you can see these spaces are getting shorter and shorter between. So the vertical lines get shorter and shorter, but they're roughly representing years, 4 years, roughly 4 years. You can see 2011 or 2010 starting out to 2042. So those are years. The horizontal, plane is representing in price, but again, it's price logarithmically. So we start with 10 to the minus 1, which is less than $1. Am I right? Yeah. Then 10 to the 2 would be where Bitcoin is at $100, 1,000, 10,000, 100,000. No. Okay, I'm off. All right. So that's $10, $100, $1,000. Am I right? $10,000, $100,000, $1 million, $10 million. Okay, if we're calculating those factors up on that logarithmic chart, and as you can see, the spaces get narrower and narrower the closer you get to the top. So when we look at pricing on this chart, we see what? We see a long-term trend up and to the right. Yeah, we see these. The green is what they would call the normal mode that Bitcoin trades in, and then the red is the bull mode, the bull mode where Bitcoin is like it is today, pumping, right? But you can see, because that red is, if we take the last cycle between the peak of the last bull market or the peak of the last halving, because these halvings usually have an impact, and you can see it. I mean, you can judge for yourself. The first one, it's normal mode. You get a bull market in between. You get a bull market in between. You get a bull market in between. You had a bull market in between the last one, and then we had that drawdown that everybody said, "Oh, Bitcoin's going to zero." Didn't. Bitcoin didn't fail. We had a drawdown. It didn't dip below the last. In other words, these lows have never been as low as the previous lows. They've been at about the mid-range of the previous high. If this repeats in the future, then if we go up that chart to the right, we're up in the $100,000 range, $1 million range, $10 million range. Yeah, and we're going out, remember, to 2041. So you're all of an age where if you start putting, let's say, monthly, a couple $100 a month maybe, over the course of a year, over the course of 10 years, yeah, that you can imagine the value of, let's say, a $10,000 investment in Bitcoin 20 years out could be the basis of a wealth management plan for yourselves, right? Again, I'm not offering investment advice. This is a situation where you really need to do your own research. You really need to think about what your objectives are, et cetera, and what your risk tolerance is, because there's a lot of risk in this, not just pricing risk, regulatory risk, nation state attacks, et cetera, because when we talk about money, we talk about money as the domain of the sovereign money, right? When we talk about holding in self-custody Bitcoin, we're talking about you being the sovereign, as opposed to the state being the sovereign, as opposed to in ancient times, if we go back to the Middle Ages, the king being the sovereign, right? We have to remember how money evolved, because the king in the Middle Ages, 1300s, 1200s, King John in England wanted to fight a war, wanted to fund a crusade. He taxed people. He taxed his nobles, who had to take that taxation that was coming down on them from the people that worked the land. They were giving up their property to fund a war. Finally, they called a halt to it, and they made King John of England sign something called the Magna Carta, which was the basis for constitutional government, right? Took the power of raising money out of the hands of the king to put it in the hands of a group of a parliament, a group of nobles that had to approve the raising of money for wars. So the king didn't have all the money in the bank. The king had a claim against nobles who were pledged to him to be able to raise taxes, but that was conditional. He just couldn't do it arbitrarily. He had to get approval. And as time went along, fighting wars became so expensive that it was no longer a matter of being able to fund them through taxation. You had to borrow. And this is where the House of Kruger and the House of, and some of these merchant banking houses in Europe arose in power and wealth because they were able to finance the wars of sovereigns, right? So the whole thing with money shifted out of the hands of the king to the hands of a group of merchant bankers, wealthy bankers, who could fund everything in the world. And that leads to my thesis about how we fix the world. Because, people in order to, merchant bankers making money, make the most money when they lend money at high interest rates to countries that need to fund, a multi-trillion-dollar war effort, right? So, all right. So again, this chart is the kind of the chart I like to look at as terms of gives me a perspective of this range, this trading range, where we are and where we might be going, right? But again, there's no guarantee of the future. So, okay, so there's this idea of the separation of state and money, again, as a way to solve some of the problems, the classic problems, the persistent problems of poverty, hunger, wealth gaps, etc. How do we do that? How do we solve that? How do we keep rogue nations from invading other nations so that we don't have to go to war, or how do we address the problems that arise as a result of result of religious animosity and wars, etc. There's this thing called the Anarcho-Capitalist Manifesto. Again, I'm not a proponent of this, but I just want to put it out there as something that people, talk about in terms of separating state and money. Anarcho-capitalists, or Ron Paul libertarians, if you will, look at ways to create a more robust community through things like voluntarism, where people do things voluntarily. You want a new road built, people in the community get together, they decide that they're going to do it voluntarily, they're going to privatize the road, they're going to build the road. Again, I do not subscribe to all of these concepts, but there are people that say that this is the way to solve some of the problems. Again, back to property rights, America fought a revolution over essentially property rights. They wanted to keep their property. They didn't want to be taxed without representation, the famous no taxation without representation slogan of the Revolutionary War. That was about property rights. And again, a legal system that's more private than public. Okay, let me just, I want to pop out here. What I want to talk with you today about is, rather than try to address this big subject of solving, fix the money, fix the world, which is too much to talk about in the time that we have, I want to focus on one thing. So I want to talk about the Bit Cafe project. And it's a project that's going to play a role here at the School of Business next year. Coffee from El Salvador. Yeah, part of the Bit Cafe project, right? Let me go through this with you. Here's the website. Coming soon to the School of Business. We use the Mean Coffee Conversation community, and so So I have a partnership with some folks in El Salvador. This is my partner, Jose, or Cruz, and he has a group of coffee farmers, small coffee farms, and we agreed to import that or export that coffee from El Salvador to the U.S. This is the story behind it. It's too small to read. Jorge, I'm sorry, I said it wrong. Jorge and son of El Salvador. This is the coffee farm. That's me. I went to El Salvador a couple of years ago, 4 years ago. I wanted to understand because El Salvador decided that they had a couple of Bitcoin communities down there, El Zante, Bitcoin Beach, more popularly known as Bitcoin Beach. I wanted to understand what this Bitcoin economy was. I wanted to see if with my own eyes it was working. I wanted to talk to people. I got to, go out and talk to farmers in the field, coffee growers, et cetera, try to understand what the impact of this change in a monetary system was doing in El Salvador, because El Salvador is the first country to adopt Bitcoin as legal tender, which means that it is legally, the banks have to accept it, stores have to accept it. It's legal tender the same way if you go to a store in the US, they have to accept your money as payment for services, your US dollars as payment for services. Same is true in every other country around the world that has its own currency. You can't spend dollars in China, you got to spend yuan, so you have to convert dollars to yuan. In El Salvador, they run two monetary systems. They use the dollar as one monetary system. It's legal tender in El Salvador, and Bitcoin. But they're the first country to stand up Bitcoin as legal tender. So I wanted to see the impact that this had on the society. So again, this is the website, talks about what we're doing, gives a roadmap or a timeline for this project, etc. Okay, but I'm gonna move from this to I'm gonna go to this. So let me talk about the Bit Cafe. Before I do that, I've got this, which so this is a flyer that's being put together by the School of Business for next semester, next year, next fall of 2024. And it's going to be an interdisciplinary project-based learning experience that's going to be, a combination of the School of Business, the College of Health and Human Services. It's going to engage undergraduate students who have entrepreneurial spirit with the Bit Cafe. It's a startup. The Bit Cafe project is a startup social impact project, locating its cafe on the third floor here of the building of the School of Business. It's an interdisciplinary project-based learning activity. Students will work collaboratively to design, develop, and support the Bit Cafe as a business model. Student entrepreneurs will develop a business plan, formulate a unique service strategy, and create a marketing plan for the Bit Cafe. A unique business model based on advanced payment systems, sustainable sourcing and farming practices, global supply chain technologies, and innovative community building. So as a business, as a project, students are going to get a hands-on experience with building this out and making this a reality, right? Making it a reality. And here's the source for the coffee for the Bit Cafe. Okay. Hand these around. Just take a look at the package. Okay. All right. So this is the challenge. Interdisciplinary project students will participate in group activities together, integrate and apply entrepreneurship and restaurant knowledge and skills learned in their majors, interact with the founder of the Bit Cafe project, develop entrepreneurial knowledge and skills, explore career opportunities available in the service industries. All right, so this is the instructors are Robert Smith, Professor Smith here at the business school, and Dr. Lee. I think it's Delisle from the College of Health and Human Services, right? So Health and Human Services, you might also add, might also refer to it as hospitality. Okay, so I'm going to go back to my Bit Cafe presentation here. So what the Bit Cafe project is, it's a model circular economy. Now, what is a circular economy? Let me go through this. A circular economy runs separate and independent from a central bank fiat economy, right? So our economy, if you go to Starbucks and buy coffee, okay, 3 cents out of a $5 cup of coffee, about 3 cents goes to the farmer, okay? Of that $5, there's a lot of money that goes into Starbucks, their marketing, their store design, the franchising, et cetera, Starbucks central office, and they're sourcing the coffee, et cetera, and also paying the baristas and et cetera in the cafe, right? So, but at the end of the day, after all is settled, there's about 40% of that $5 cup, about $10. Not a dollar, right? 40%, $5 cup of coffee. It goes back to shareholders. So at the end of the economic process, I think I have a slide on that. So this is a traditional supply chain versus a circular economy. This is the way the Starbucks would work, right? So you've got a centralized supply chain with a producer, coffee producers in El Salvador or in Brazil or around the world where Starbucks sources their coffee. By the way, Starbucks is everywhere. Most of the farms in El Salvador are certified by Starbucks. They have to meet their Starbucks standards, requirements. Starbucks likes to talk about being a fair trade organization, so that they're trying to pay fair wages. We'll talk about that in a minute. So there's the producer, and then at the end there's the consumer, and then I could add another line, shareholders. So it's kind of a one-way street, a one-way process, right? And in the middle, you've got all of these intermediaries. So this is a centralized supply chain. And the centralized supply chain creates convenience with security trade-offs. Convenience, meaning, you can go to a Starbucks, you can get the same cup of coffee at any Starbucks around the world, and it's convenient. You just have to flash your credit card or your debit card or your cash, and you get a Starbucks coffee, and it's very convenient, right? As opposed to trying to do the whole thing yourself. Efficiency gains that accrue primarily to intermediaries. In other words, the intermediaries kind of make it efficient to export products from the emerging economies to the U.S., to distribute those products, et cetera. There's efficiency. Thanks. There's efficiency. So producer and consumer squeezes. So the intermediaries get the biggest chunk of a $5 Starbucks coffee. It's the consumers that either pay a higher price at the end, or producers, they get the least amount of money out of that transaction. So the squeeze is on consumers and producers. The intermediaries, the whole thing is structured to benefit, to benefit the intermediaries. Okay, and then the greater disconnect between producers and consumers. When you buy a cup of coffee from Starbucks, you have no idea where it came from. I mean, it says on the package it might have come from Kenya, it might have come from Colombia, it might have come from, wherever. But you don't know who the farmer is. You have no idea what life is like on that particular, for that producer. There's a disconnect. There's a stretching out of, it's making everything more or less anonymous. Versus a circular economy. So here's a circular economy where the producer and the consumer actually have a direct connection. This is possible when you're dealing in a currency that is digital, because you can cut out these intermediaries. Yeah, you can cut the intermediaries out of the picture, or you can reduce the intermediary cost to a bare minimum. You still need a shipper, for example, but depending on who the shipper is, you can arrange to make sure that the shipping costs do not take an undue amount out of the transaction. The biggest thing is you take the financing platform out of the equation, which is where a lot of the markup costs come from. It's transaction costs, right? The cost of settling a transaction. Supply chains on a Bitcoin standard create greater security and privacy options because you're dealing direct with the farmer. You're dealing direct with the source. And this could apply to any product. It doesn't have to be just coffee. It could apply to any product. We're dealing directly with the people that make the product. So there's security in the sense that you know where it's coming from, you know the process, you can shake hands with the farmer, and have a greater amount of security in the transaction. Privacy also, because with using Bitcoin, it's anonymous, like cash, like dollar bills. So you're paying for your product. It's anonymous. Nobody's tracking what you're buying, how much you're paying, what you're spending your money on. You have freedom. Okay, efficiency gains that accrue equally to producers, consumers, and intermediaries. Greater direct connection between producers and consumers, and sustainability and resilience through decentralized democratic decisions. You have, if you're dealing direct with the farmer, you have a say in the whole process. You're just not getting whatever is produced by Starbucks or whatever is produced by Nestle or whatever is produced by Dunkin' Donuts. You have a say in this process, right? So, go back a couple slides here. So this is the circular economy defined. The circular economy allows anyone to earn, spend, donate, and buy Bitcoin from those who do the same, creating a circular economy. A circular Bitcoin economy is where commerce flourishes free of surveillance, censorship, and undue reliance on trusted third parties. Yeah. In Bitcoin, they say, don't trust, verify. Right? In the banking world, in the fiat world, I have to trust the banker. I have to trust the government, the Federal Reserve, the the Bank of International Settlements. I have to trust all of these third parties to keep these transactions accurate, even if they're not transparent. Okay, so the Bit Cafe circular economy model is very simple. It's coffee. We want to sell the best coffee in the world. This is all won prizes for in El Salvador as the best coffee. This past fall, we had a competition, and this millennial, this Genesis block coffee was rated, 9.9 out of 10 in a competition with other Salvadoran coffees. It's all hand grown on small farms, tended to by families, family farmers. There's a process. It's ecologically balanced. It's sustainable, assuming that, again, they can get the price at market that they need for the labor input, which is intense. Okay, so the next piece of this economic model is education or conversation. I call it conversation because it's a dialogue, but it's really about everybody coming to a common understanding of what's going on and what we're doing here. When El Salvador made a decision to convert to a Bitcoin economy, the biggest challenge was not getting money in the hands of people. The government gave everybody, and I know this doesn't sound like a lot, but in El Salvador it is, $30 worth of Bitcoin to everybody that opened or that had a card, what they called forget the name of Chivo wallet. So the government built a wallet, a Chivo wallet. Unfortunately, the rollout was kind of like our health, our Obamacare website when it first came out. It had glitches. It was kind of a rush job. Software-wise, it didn't. It made some people pissed off some people because they used the card. They thought they had $30. They went to the bank to immediately put the card in the machine and get their $30 in US dollars out because they didn't understand Bitcoin, didn't want Bitcoin. Oops, I got a free $30. Go to the card. Card didn't work. Anyway, they had some problems, and some people lost confidence or faith that this Bitcoin thing was a real thing in El Salvador. Nonetheless, so the biggest challenge was education. And so El Salvador the government has created an education project. A lot of NGOs, non-government organizations from around the world, one of which I serve on their advisory board and work with on this education piece, which is educating Salvadoran citizens, most of whom don't have more than a third. Public school in El Salvador ends at third grade. It's too poor a country to have a secondary and a public university system. They do, but most of the schools, any schools worth going to, are private. So you got to have money to get an education in El Salvador. There is a class of people in El Salvador that has the money and do get educated. A lot of them, my partner Jorge, got educated in the US, private school, went to US University, joined Microsoft as a team leader on their global licensing platform. Very successful guy. His family back in El Salvador had one of these small farms. His father was getting older. He decided to cash in his Microsoft options, et cetera, up in Redmond, Washington. Went back to El Salvador to run the family farm. So he's drawn back to his community, particularly because he was the first one to put a Bitcoin to sell coffee in El Salvador and accept Bitcoin as payment. Okay, so but education is critical to this cycle, right? And so we've launched an educational project in El Salvador. This program next year, I plan, hopefully, to get the students that enroll in that course an opportunity to actually participate in this education in El Salvador. To be adjunct teachers, professors, et cetera, to, hopefully, if you don't have Spanish, fortunately, we've got AI that now can convert your voice to Spanish, et cetera. So, but there's a way for us to engage with the Salvadoran people in this educational journey, right? And again, these are people that don't have an education, usually don't have an education. In El Salvador, 70% of people don't have a bank account. Why? It costs $25 to open a bank account. The bank won't open an account for you unless you put a $25 deposit down, right? Most people don't have $25. So they're very poor. They don't have an education. They do day labor. They get paid at the end of the day, maybe $5, maybe $10. I spent time on the farms. I tried to follow some of these, coffee grower, the people that work that pick the berries. The coffee is a fruit with a bean inside. So you have to pick the fruit at the exact right time. It's got to be the right color, right shape, right texture in order to get good coffee. You take the bean outside of the cherry. You dry it. You've seen the process, I'm sure. You're familiar with it, but it's a process for generating good quality coffee, right? But it's labor intensive. And I tried to spend a couple of days carrying one of those white, bags, vinyl bags. You can put 100 pounds of cherries in the bag. It's up and down mountainsides because the coffee grows on the mountainside. It's backbreaking work. At the end of the day, you put your bag on the scale, they weigh it, and the farm manager will dole out cash, $10 for a bag, for a 100-pound bag. Yeah? Okay? Or 100 kilograms, kg bag, so it's even more than 100 pounds, right? So people are working really hard. They don't have cars, they go in a truck back and forth to the village, or they squat on the land, they set up essentially tar paper shacks, on the land, so they don't have to go back to the village at the end of end of the day so they can start work at the break of dawn the next day. We're trying to educate around how people can break that cycle of poverty and work for less than value. Okay, and then we end up with community. What is community? So the Bit Cafe project will operate as a nonprofit organization, nonprofit company. That 40% that would go to shareholders, actually it's not 40% in our model, it's less than that, but we will hold profits in reserve in Bitcoin and use that over time. Again, long-term hold. We're not volatility. We're going to ignore the volatility in the short term because volatility will make it impossible, to accomplish this. Volatility is a real thing. But so if you're buying a cup of coffee today for a certain amount of Bitcoin, tomorrow the price might be different because of the volatility. Yeah, it goes up 10%, down 5%. I mean, you got to calculate that. But the reserve that we hold, kind of like Michael Saylor's MicroStrategy, if you're not familiar with MicroStrategy, the company, where they hold they're a software company, does enterprise software, 100% of their profits don't get distributed to the shareholders. They get put in a Bitcoin reserve. Today, Michael Saylor and MicroStrategy are approaching Facebook and other companies as probably one of the most valuable companies in the world because of this long-term holding project. They've been holding Bitcoin for more than 5 years as a reserve. So we want to do the same thing, and then we want to use that money, that reserve, not all of the principal, but some of it, to leverage projects that will address critical issues both here and in El Salvador. So we want to work with the community for community impact or social impact projects using the reserve funds that grow over time. Make sense? So the Bit Cafe's combination of a coffee experience, superior coffee experience, an education project, and a long-term investing project in communities, community development, community growth, right? Okay, is there a model for this? So these are other hubs, and there are several hubs in the US now. A place called PubKey down in New York that's doing education. They're doing bits of what we're trying to do here, but not the whole thing. These are projects in other countries, in El Salvador, Costa Rica, Guatemala, South Africa, Brazil, and other Latin American locations where these hubs are springing up of circular economies. These are domestic circular economies, communities trading with one another for services using Bitcoin. Okay? We're trying to set up what I would arguably say is the first international circular economy, because we're going to actually import coffee from El Salvador and pay the growers in Bitcoin through our model. Now, there are all kinds of hurdles to this. Okay, there's regulatory issues. Transferring money outside the banking system. Well, there's lots of laws against that. It's anti-money laundering laws, etc. So we're going to have to figure out ways to do this that aren't going to get anybody getting a knock on the door from Internal Revenue Service or one of the other regulators, right? But as the last couple of years have shown, the SEC lost their first case ever to GBTC, which wanted to do a Bitcoin ETF, and the Security and Exchange Commission kept saying no. They said yes to gold. They said yes to other commodities, silver, etc., but no to Bitcoin. Finally, the court said, enough, guys. You're being very arbitrary about this. You have two sets of rules, one for this group and another for this group. That's not governing under the law. So the SEC lost the case. So the regulators are up, and now there's other cases pending that are going to clarify this regulatory environment a little bit. So how am I doing? Oops, I'm almost out of time. So this is the circular economy project. I'm happy to go through this in more detail. We will go through this in more detail next year. I'm also talking with the School of Business about other ways of getting people certificates or micro credentials, in this subject, credentials that you can earn that show that you've gone through a Bitcoin course or a course, in the circular economies, et cetera, around the world, how they work, et cetera, so that we can get you the skills and the knowledge that you need as you try to make decisions about your own future, your own work, and what's happening, in these global economies. This is really a project that's trying to address this is really a project that's trying to address supply chain issues that we live with today around the world and that are getting extremely stressed because of geopolitical conflicts, because of, essentially the entropy that occurs, with any centralized organization where everything is supposed to be. I referred last week, I think it was, to the cathedral versus the bazaar. We're trying to recreate a global marketplace, a global bazaar that can work on a different standard of transacting. Yeah. Part of this, so here's a map of El Salvador. El Salvador, by the way, that's not to scale because El Salvador is about the size of Connecticut, Rhode Island, and Massachusetts physically. But there's the capital, San Salvador. El Zante is Bitcoin Beach. The grower community that we're working with is in the western part of the country. And, we're looking at different Bit Cafe projects, different schools, different communities around the US that are now in, and of course, having Bitcoin be front page news in the Wall Street Journal and the other financial journals doesn't hurt, because now people are interested in this concept or interested in this idea. So we want to start here at the School of Business. We want to give the students here an opportunity to learn an entrepreneurial model, an entrepreneurship model that's based on modern digital finance, because that's what's here and now, that's what's coming. The future is here, as they say. It's just not evenly distributed. We want to start here at the School of Business and try to distribute this knowledge base so that people can work with it. Okay, so I'm going to stop there and ask. I told you I was going to talk all hour. Told you I was going to do this. All right, questions, comments? Some of you have been here for the whole 4 sessions. I'm interested in feedback, positive or otherwise.
When is it that you guys are going to open or planning on opening?
So we're going to launch the Bit Cafe as a project here at the School of Business on the 3rd floor, little alcove with a balcony on it on the 3rd floor next fall. Well, actually, and I'm not sure exactly when we will get a coffee cart with our coffee and start serving, coffee for cash, credit card, or Bitcoin. Yeah, but we're going to make paying in Bitcoin. I keep a wallet on my phone. I'm sure most of you who have any Bitcoin have a wallet on your phone. All I have to do simply is, if I want to buy something, let's see. So I haven't done this in a while. Okay, so. Take a minute. I have a wallet. Basically, it generates a QR code. At the cafe, you have a QR. You use your phone with a QR code scanner on it, and it helps do the transaction instantaneously. We use what we call the Lightning Network, which is a layer 2 on top of Bitcoin that settles transactions. If you look at MasterCard, Visa, any of the debit cards, they are a layer 2 on the banking system, because they process transactions Essentially, it doesn't settle in your bank account for maybe a day or two or longer. It actually gets pulled out of your account as a, you'll see pending payments sometimes if you go in and look at your bank account. But those are credit cards. Credit cards do the processing or the settling of payments so that you don't have to wait 5 or 10 minutes or longer in line to have your credit card payment processed, right, with your bank, right? It does it instantaneously. Lightning Network does the same thing on the Bitcoin network. It processes it instantly at 0 fee or a penny for a transaction, let's say, right? Very low fees, right? So we'll use that again. And the idea is, my concept is, when we make that payment, the farmer gets the payment on their phone. We can have a live screen so they can actually see the farmer, see the transaction completed, shake hands with the farmer virtually, and know where your coffee is coming from and the impact that purchase has on that community. Because instead of 3 cents per cup of coffee, they're going to get $1 per cup of coffee. That's going to make a huge difference. It's going to allow for sustainable healthcare. It's going to allow for education. It's going to allow for housing. It's going to allow for roads, clean water, environmental protection.
Before our class breaks up here, I want to acknowledge your contribution to the PEP Talks, Bit Guy. Thank you so much for sharing everything with us. I'm not sure if we're going to get the boot here. Are they giving us the boot, Jose? Not yet? Okay. There might be another event here, but I did want to thank you for sharing your expertise and your time, and obviously considerable time went into organizing this to share with all of our students. This is the PEP Talks. Tell your friends about them. Bring people to them. These are great ways to network with our speakers and to get an edge on your competition. So thank you all for coming and supporting.